It's a pretty simple story today. We have that strong dollar, weak emerging market currencies, and that's at the margins impacting our stock market and having some effect on the global markets. Just take a look at the sectors we have. We get days, you get that strong dollar, things move up. You get emerging markets weak. There's the EEM. You get metals and mining stocks weak. There's that XME, the second one. You get China internet stocks generally underperforming. There you go there. Banks, when the rate's a little bit lower, banks had been going up, but the rate stopped going up, so they've been underperforming as well. Sectors outside here, if you look at the emerging markets, if you look at where we are in some of the global markets here, China was down, Indonesia was down, Thailand was down, Brazil, all the usual suspects when you get currency pressures that are going on here. These problems with the dollar started really earlier in the year. Emerging markets have had a problem since really February and March. There's the dollar index, which is a basket of several currencies. And you can see beginning late March, April, the dollar started really rising. And that's when these emerging markets really started having problems. This is not a new issue. It's been going on for a while. People always ask what happened. Why is the dollar so strong? But there's a number of very clear reasons why this has been happening. Remember, the Fed's been raising rates, and they've ended their expansive monetary policy. So the dollar supply is constrained. Supply demand is very important when you're dealing with the currencies. That's probably the most important factor going on. Other central banks, meanwhile, have generally still been accommodative, particularly the European Central Bank, where the euro's been weak. And then we just have the simple fact that the U.S. economy's been strong. There's much more demand for dollars. Foreigners come in, they want to buy U.S. stocks, they want to buy U.S. bonds. Commodities are priced in the dollars. Supply demand kind of gets out of skew, and the dollar just gets stronger and creates all sorts of problems. So here you see emerging markets. These are the stock markets of these countries: Shanghai, Argentina, Philippines, Indonesia. This is year to date. But again, these problems started back in really February and March, but particularly got worse beginning in April when the dollar really started moving up. People ask me about India, by the way. They say, hey, why is it India? Why India's up 12 or 13%. India's kind of a special case because they're rather isolated from much of the world supply chain, and they almost operate largely independently. So India's been doing very well. As for the stock market right now, folks, we're very overbought. And I use very simple indicators. The RSI measures how overbought or oversold sectors of the market are, usually about 2-3 weeks. And you can see what's going on. If you're above 70, that's an overbought indicator. That means historically the traders have been buying these rather aggressively. When you're over 90, just put that back. I just want to point out, when you're over 90, that's like, you've got to be kidding me territory. So healthcare and technology are dramatically overbought right now. And certain numbers there you see in the 90s, that's a very rare number to see that. The NASDAQ 100 stocks over close to 80. This indicates overbought conditions. There you see some of the other ones like AMD and Apple and Cisco, all overbought territory. So it's no surprise. Historically, the market would pull back in certain sectors, particularly healthcare and tech, when you're in this kind of level of move in the last couple of weeks. Right now, the Dow's down 22 points. Carl, back to you.